Welcome to our video series, Introduction to Credit and Credit Cards, as part of the Financial Literacy and Wellness Badge Program hosted by the University of Las Vegas Graduate College and presented by US Bank. My name is Dr. John Hirano, and I'm a goals coach with US Bank. I have the privilege of helping individuals like yourself, discover and think about their goals, why they're important to them, and then partner alongside them as they reach their goals. Some of these goals are financial in nature, like buying a home, or sometimes they're just about something non-financial, like pursuing a passion or really looking and understanding oneself. In this series, you'll learn a little bit at a high level about what is credit, why it's important, and some best practices around credit cards. I would now like to present my colleague, Jason Chilton, to share a little bit about that and a little bit about basic credit.
Thank you, Dr. John Hirano. Hi, my name is Jason Chilton. I'm the manager at the US Bank branch in the UNLV Student Union building. I've been with US Bank for 13 years now, and I've had the pleasure of working right here on the UNLV campus for the past 5. The most common question I'm asked by students here, whether that be in the branch or during a financial wellness seminar I'm hosting on campus, is how do I establish credit? The first thing to understand is what credit bureaus look at when calculating your credit score. There are 5 main factors. The first factor is payment history. If someone has a consistent history of making payments on time, they're perceived as less of a risk than someone who only makes payments from time to time. This is why it's important to form the healthy habit of always making your payments by the due date. The second factor is outstanding debt. This is the total amount you owe across all lenders report to credit bureaus. This includes bank loans, mortgages, credit cards, and other lines of credit. The third factor is utilization ratio. This ratio represents how much of your available credit you are using. If you max out your credit cards, it can be seen as a risk to banks, so it's recommended to use less than 30% of your total credit limits. This means if your limit on your credit card is $1,000, try to keep your balance below $300. The fourth factor is credit type and history. Someone with a longer, more diversified credit history is typically seen as a less risky borrower. This is why it is important to establish a solid credit foundation as early as possible. Many students ask me when to start establishing credit, and the answer is simple: the sooner, the better. By starting with your first credit card in college, this will allow you to establish credit to buy your first car, and then eventually your first home. The fifth and final factor is recent inquiries. Each time someone authorizes a lender or business to make an official inquiry in connection with taking credit, your score usually drops a little. So it's important to apply for credit in moderation. Several inquiries in a short period of time can be seen as a risk to lenders. So don't go out and start applying for several credit cards and loans all at once. Make sure you have a reason for each new credit application you do. Now that we understand what key factors go into a credit score, let's define a few important terms. The first is annual percentage rate. The annual percentage rate, also referred to as APR, is the amount of interest on your loan or line of credit that you pay annually. This also includes any fees and other costs of the credit line or loan. The second term is compound interest. Compound interest builds not only on the principal balance, but also the accrued interest. This is why it is recommended to pay a little extra towards your loan whenever you can afford. So why does credit score matter to you? When you have a good credit score, you have more options to get credit for major purchases. It can be very difficult and take a long time to save $400,000 for your first home. A good credit score can help you get the loan you need to buy the home of your dreams. This is because a good credit score lets lenders know you're more likely to pay. Not only does a good credit score help you get the loan, it also makes it more likely for you to obtain a lower interest rate. This is important because a percentage point here and there can add up to a lot of money over time. You can use the money you save to spend on things to make you happy or invest for future growth. Now, on the other hand, if you have a low credit score, it may impact your ability to get loans in the future. And if you do get a loan, a low credit score can make the interest on your loan much higher. As an example of how much higher interest rate can cost you, let's consider purchasing a home. The average price of a home in America is $375,000. If you make a down payment of 20%, you would need to get a mortgage of $300,000. Now, if you get a 30-year mortgage at 3.5%, it would cost you $29,635.20 more in interest than the same mortgage at 3%. You can buy your entire new car with that. This is why it's extremely important to form healthy credit habits right away. Now, this is just a brief introduction to credit. For more information on this and other financial topics, please refer to the link attached in this video. Back to you, Dr. Hirano.
Thanks, Jason. Thanks for laying such a great foundation on what is credit. As we conclude this video, I want you to take a moment to kind of reflect on what Jason had shared and really think about how you might apply that to your life. We've got a few questions to kind of get you started. Firstly, How might you leverage credit to make a future purchase? This may be something small, or maybe something as big as a house. What is your credit score? Do you know? If your credit score is not as high as you'd like it to be, or if you're not quite sure, think about what those 5 factors are that might be negatively impacting your credit score and how you might make some adjustments to improve it. Now that you have a fundamental understanding about credit, in our next video we'll be discussing the topic of credit cards and some healthy habits.